Okay, I am here with Chris Brent at Stone Castle Financial. He is a lender. Chris, why don't you give us a little bit of background?
Hello, Kelly McCoy. Uh, yeah, I've been in the business since 1998. I started doing loans right out of college, graduated from St. Mary's, and started my career at Norwest and Wells Fargo. And been a broker for about 18 of those years. So I'm a true broker, which means that I have, I don't know how many lenders we're approved with now, but 40 plus lenders um, that we can broker to. And just a little bit different than the banks. We do the same thing at the end of the day. We get you a loan and we facilitate, basically from start to finish. And at the end of the day, hopefully you get a great loan that you're happy with.
Cool. So tell us what's going on right now in the market. Just give us, an update as regards to, purchase loans and appraisals.
How much time do you have on that one? I guess the quick answer to that is things are a little crazy. I made it through the dot-com bubble burst, and then 2008. But those are very different times. Right now, demand's still really high. There's still lots of people that want to refinance. They still want to buy homes. Rates are still relatively good. But the turmoil in the market has made things very strange the last 2 weeks. As many people probably saw, we went from having the lowest rates in recorded history. I think Fannie Mae or Freddie Mac's been recording interest rates going back to the 70s. And at one point, about 3 weeks ago, rates hit the lowest of all time. And that lasted for about a week, and then everything just kind of imploded. So we're dealing with that. Everyone's trying to fix things. Obviously, with the stimulus package, the Fed's trying to get things back on track. And this, obviously, the COVID-19 is causing a lot of problems. But we're still open for business. We're still lending. Rates are still very good. And not too much has changed.
So, prior to all of this happening, you are handling and processing a ton of refinance applications due to these low rates. Has that picked up? Has it slowed down? And as a result, are lenders kind of adjusting the rates and the application processing times and things like that?
Well, a big chunk of the market, and I think a lot of the realtors out there have probably already experienced this, a big chunk of the market kind of went away in the last week. And that's what we call kind of non-QM lending. Not all of it, jumbo loans, interest-only loans, things like that are in the non-QM category. Non-QM are loans that basically aren't Fannie and Freddie, to keep it real simple. And the bank statement loans, the kind of the what we used to call kind of Alt-A loans have basically been frozen. And there's a lot of buyers that were in contract to buy homes, and their loans basically overnight have been put on hold. But as far as the conventional stuff, rates are up a little bit. I think today Freddie Mac reported the average 30-year fix being 3.5. And I think I have clients that are disappointed in that because they were expecting 3% or 3.25. But 3.5 historically is still phenomenal. I think the consensus is, with the government and the Fed buying unlimited mortgage-backed securities, and as soon as we get this whole, virus thing under control, I think the consensus is that we're in for all-time low rates again. And I've heard a lot of people talk about rates below 3%. I don't know how we're going to deal with that, because every person in America will want to refinance and buy, but I think we're heading there. Me personally, I think within the next 2, 3, 4 months, possibly weeks, we could see rates at 3% or lower again.
Wow.
Mm-hmm.
I think, just being in real estate, I think the concern for a lot of people is the stock market was hit really, really hard. A lot of industries are hit really hard. So the concern is, are the interest rates being lowered out of fear that our financial policymakers have, and they're trying to bolster the economy, and B, are people's, life savings being deteriorated by this crisis, and what's that going to look like on the other end? And maybe there's no answer for that right now, but we do worry that people won't have the money they had originally for a down payment. Is there anything you guys are going to be able to do to help those people?
I mean, yes, I think the simple answer to that is we need to keep interest rates low. Obviously, I'm not a policymaker, and I'm not going to dictate that, but I think it's from a positive outlook standpoint, it's one of the reasons we all believe that rates are going to stay low and get even lower.
Yeah.
Because when we get out of this on the other end, rates are going to have to be low to keep everything else up. I mean, this is putting us into a global, basically, recession.
Yeah.
Look what's going on around the world. So real estate is such a big part of our economy in this country that it needs to be bolstered. It needs to be held up. And one of the ways to do that is with, low interest rates. And I think the people that are patient now, and I think if they run out and just say they're at 4% or 4.25%, I'm not saying that they shouldn't do this, but just say they run out and get a rate at 3.75. I believe in the future, not too far in the future, there's going to be better opportunities. And, I think there's going to be great opportunities from a real estate standpoint as we get out of this. I think the market's going to, I think prices are going to soften a little bit. I mean, you're probably already seeing it. But when we get out of this, I think people are going to have great opportunities. Their down payments might not be as much as they were a month ago or 2 months ago. But the agencies, Fannie Mae, Freddie Mac, the lenders really haven't adjusted the LTVs yet. So maybe when we come out of the other side of this, instead of putting down 20%, they put down 15%, but maybe the rate's 1% lower. So it kind of things out. So I think we'll be okay. And the stock market, the last couple of days have been great. So let's cross our fingers and hope it keeps going in that direction.
The whole lesson in this too is real estate's a really valuable investment. I mean, with these low rates, if you lock it in with a 30-year loan, you have savings and it's secure. It's more secure than a lot of other investments people make. And we've just seen that over the decades that real estate can be a very valuable investment.
Look at anyone. Well, first of all, if we can get rates to where we want them to be, I mean, think about it, a 3% 30-year fixed. I mean, 3% for the next 30 years. I mean, that just, to me, is mind blowing. Yeah. I mean, up until a couple of weeks ago, the lowest 30-year fixed I'd ever done without points is 3.25. So the fact that I was quoting people 3% and thinking they were going to go below 3 just is mind blowing. But think about the people who bought in 2008, 9, 10, and think about where we are now. I guarantee you, all those people are very happy that they bought homes in 2009, 2000. And America always bounces back. People here have short memories, and I think people who buy now are going to look back and do the same thing in 10 years from now and be very happy that they bought and did what they did. And especially if they can lock into a 30-year fix at 3%. I mean, unless you're going to pull money out or change the term of your loan, you'll never have to refinance again.
Well, thank you so much. Stay healthy, and thank you for your time.